Are you starting a Web3 business and selecting a subledger for your accounting system? Does this task seem daunting because of the amount of choices that you have when it comes to subledgers? Well, look no further. In this video, we're going to go over the top considerations that any Web3 business should take into consideration when selecting a subledger. My name is Patrick Camuso. I'm the director of Camuso CPA. We have helped dozens and dozens and dozens of Web3 businesses select, implement, and maintain their subledgers. And I want to go over some of the things that I've learned from my experiences. So, let's first go over what is a crypto subledger. A crypto subledger is going to collect and consolidate all of the data that's happening across your non-custodial wallets and your centralized exchanges. Basically, what the crypto subledger is going to do is pick up any cryptocurrency activity, and within this subledger, you or your accountant are going to be able to properly categorize and reconcile this crypto data, which then in most cases is going to get imported into your general ledger via journal entries. You may be using QuickBooks, Xero, NetSuite, or other general ledgers. So that is the purpose of your subledger, is to capture the cryptocurrency activity in a way that is going to give you accuracy and reporting for both tax and accounting purposes. And then this will all roll up into your general ledger. So right now, the landscape for subledgers is extremely fragmented. There are many different companies that are in this space, and it seems like more and more are popping up every day. During this last bear market, we saw a huge acceleration of new companies popping up that are looking to serve this space. So there's a lot of options, and to a degree, a lot of these options are becoming somewhat commoditized due to the number of players in the space. We've recently seen some consolidations and acquisitions, and we're expecting to see more of that. Now, there's still several factors that we're going to need to consider to choose the best subledger. And why is this important? Because it's a huge commitment to select a subledger and then set up and maintain an accounting system on it. If you just go ahead and choose the first one that comes across your desk, or not do proper due diligence and just choose any subledger, you can create a huge cost, time, and effort on your team and on your accounting team if you eventually have to change subledgers. So you really want to make sure that you're choosing the right subledger. Now, the biggest problem with all of these subledgers, no one is really immune to this, is the data quality. Right now, most subledgers are looking to integrate with dozens, sometimes hundreds of blockchains. In a large degree, it's a race to capture the most amount of data sources from the perspective of these subledgers, because that is one of the factors that we have to consider when we're choosing which subledger to choose. The issue is that this data quality that we get from these subledgers is not always high quality. As crypto accountants, a lot of times we're debugging these softwares, we're dealing with data issues before we even actually get to the crypto accounting. So another key to understand is that none of these subledgers are going to be plug and play. They're all going to have data issues. And it's very important to understand that the data integrity is probably one of the biggest issues, and something that's going to have to be addressed not only upfront, but usually on an ongoing basis. So what factors should we consider when we're selecting a subledger? Number one is going to be just when you're looking at options, is determining what core reporting features do you need? And what core tax features do you need in terms of what tax calculation methods are going to be permitted when it comes to FIFO, specific identification, and other accounting method selections, and how are these reported and calculated in the crypto tax softwares. And then the question is, based off of your reporting requirements for both accounting and tax purposes, is this going to be able to meet your needs? Getting into the reporting, the reports are going to vary from each subledger, and this is something that you should review with your team and your accountant. The reporting is critical because that's going to be basically your interface for how you're going to interact with all of your cryptocurrency transactions and on-chain data. We want to leverage this reporting and the data imports in these subledgers to be able to track and trace the flow of funds rather than just solely relying on block explorers, although oftentimes we do want to leverage those to verify some of the information. So there's several reports that are going to be needed. The biggest one is going to be just a basic transaction report, an auditable ledger with a full audit trail that is going to show every single transaction with full details. And that report is extremely important because it helps us get a full picture of your activity, and also it helps for reconciliation purposes. We want to see your cost basis details, realized gain or loss details, the transaction values in USD, the type of transaction types. Usually have a good link out to the block explorer if we want to investigate further, and several other details. So that auditable ledger is the main report. And then from there, another important report is your cost basis report that is going to show your calculated ending balances for any given period that you're doing the accounting for. The reason that this is so important is because this report is crucial for due diligence purposes, because we want to compare those calculated ending balances to your actual ending balances as one of our final due diligence checks to make sure that we are verifying our calculations and overall accuracy. If something is understated or overstated in our calculated ending balances report, that requires further investigation on our end to make sure that those ending balances are stated correctly. We're also going to need a roll-up report that shows all of the journal entries that are getting booked into your subledger once you sync the data. There's several other reports that are good to have that I can go over. I don't want to just continue to list out every single report because this is going to be out of the scope of this video, but these reports are crucial, and you want to compare the overall reporting between subledgers, for their whole list of reports, and see which one is going to serve you and your company better based off of your needs. Outside of the reporting, the next big consideration are data integrations, and each subledger has a different approach with this. You'll see some subledgers that aren't necessarily competing on integrations. They maybe will have 10 to 20 integrations where, on more highly used blockchains. And then we'll see other solutions that have 100 plus integrations, sometimes 200 plus integrations. So, really what you want to consider here is your business model. I work with some Web3 companies where their long-term plans are only to stay on 1 to 3 major chains. And in that case, we can look across the different options, and if they're major chains, probably most subledgers are going to support that. We have other clients at Camuso CPA where they're on many different blockchains, and sometimes they don't even necessarily have a definitive perspective on which blockchains they're going to be on in the future, because they're looking to see, which chains are picking up in activity and going there to acquire customers. So depending on your strategy and depending on which blockchains you're actually going to be transacting on, we need to cross-reference that with the subledgers and see if they support these data integrations. It's very important that we find a subledger that is going to have APIs established for as much of your data as possible. And one of the best ways to do this is to basically upfront try to see which blockchains are you on and which blockchains are supported. Now, what I will say is that inevitably, there's going to be some type of transactions or blockchains that you're using where the API integration is not going to be sufficient. This may be transactions that are highly complex, maybe an IBC transfer, maybe some type of bridge where the API is not picking up the data properly, or there may simply be a blockchain that you decide to use that isn't supported by the subledger. In that case, what we're going to have to do is manually update and or manually import the data into this subledger. So it's another important thing to check up front when you're considering subledgers is what are their manual upload capabilities. Not all subledgers have these capabilities, and the ones that do, some are going to be better than others. So we want to make sure that we have the capacity to easily upload data and manipulate data within the subledger based off of the facts and circumstances. Another big consideration when it comes to choosing a subledger is the pricing sources and the hierarchy that they follow for any given asset to determine which pricing source they're going to use for the given transaction. So, we see companies use several different providers. Some are using Crypto Compare, CoinMarketCap, Keiko, and others. If you're following US GAAP, you're going to have more stringent requirements regarding the pricing sources versus if you're not following US GAAP. Either way, we want to understand the hierarchy of pricing data that the subledger is using. And you want to consult with your accountant or your tax advisor on this to make sure that this is going to be sufficient for your needs and your specific company. Another important aspect of choosing a subledger is the reconciliation tools that they provide. Mainly, what type of features or functionality are they going to have to assist you and your accounting team in detecting errors within the calculation. So, some of these subledgers are going to be better than others at alerting you when you have a missing cost basis for an asset that you sold that you may need to reconcile, or when you do have an ending balance that you've calculated that is over or understated when compared to your actual ending balances reported within the block explorer. So to the degree that these subledgers are able to provide more capabilities and streamline this error detection process, it can go a long way in your month-end closes. And then, of course, we want to consider customer support ratings as well. We want to take that into account because our firm finds herself a lot, even though we're highly experienced on these subledgers, we do have to reach out to the support teams due to data issues that sometimes, we can't totally correct within the app ourselves. Sometimes we do need to reach out and collaborate with these teams and fix specific issues for our clients. And we want to ensure that they're able to work with us closely and in a timely manner. We don't want to be sitting around waiting for support for weeks to resolve an issue that we've identified for them. So it's very important to look at customer ratings and the responsiveness of the team that's behind building this subledger. Then also, another thing that we have to consider are the data load times and report generation speeds. There's some subledgers that are out there that have built great data architecture, and they're very quick with the calculations, report generations, and it's overall an extremely smooth process using their UI. There's other subledgers where, it's very slow and cumbersome, and to do a calculation, it can take quite some time, even for a basic calculation. Same thing for downloading reports. Sometimes, it can take a long time just to generate a report. You may have glitches where you have to refresh just to get the report. So, you want to make sure that the subledger has just good a good overall UI with good data load time. So you're not sitting there constantly refreshing to get a report, or, waiting 20, 30 minutes for a simple calculation. And on this point of just report generation and data load times, you also want to be very careful in understanding what are, the policies and processes in place for locking your data and refreshing data in the future on these platforms. A lot of times on some of these subledgers, you may reconcile a whole year's worth of activity, and if you're not able to lock that data, if you resync or refresh it, it can wipe out a lot of the work that you did. So that is another important aspect of just the reporting and the data quality that you really want to pay attention to. Another related point is going to be spam filtering. There's a lot of spam tokens that are hitting people's wallets. Some blockchains are more notorious for this than others, but we see spam tokens quite a bit. And some subledgers are going to be much more automated in helping us filter out those spam tokens, and some are going to have more of a manual process around that. So this is another consideration. Additionally, just overall for your transaction flow, we're seeing most subledgers now create very good rule sets where we can, to a degree, automate a certain level of the transactions if the data quality is there based off of contract addresses or other factors related to the transaction. So you definitely want to look at what are the rules that we can apply that can help us to a large degree automate a portion of us booking transactions, whether these are spam transactions or just other types of transactions that your company is going to be having on a consistent basis. One of the last considerations that we need to take into account after we've taken all these other aspects into account, usually what I do is we'll take all these aspects into account when we're working with the new Web3 company, and then we will boil the selection down from dozens and dozens and dozens of these subledgers, maybe to 2 to 5 subledgers. And from those 2 to 5 subledgers, once we understand their capabilities and usefulness as it relates to your company, the last thing that we want to consider is pricing. Now, the pricing, just like we have an extremely fragmented industry right now at the subledger level, the pricing has a very large range as well. And you want to make sure that you are, paying for the capabilities that you need, but you're not overpaying or, paying for features that you don't necessarily need or use. So you want to take that into account and compare the pricing models to your top choices, and then possibly even go ahead and negotiate a fee with them based off of the full facts and circumstances. So those are the main factors that you want to consider when you're choosing a subledger. Now, again, let me remind you, none of these subledgers are going to be plug and play. You're still going to need an experienced crypto accountant to deal with all the data integrity issues, properly reconcile this subledger data so we can get everything accurately reported within your general ledger. So if you're a Web3 business and you are right now looking to get an accounting system set up, this can be an extremely daunting task due to the options that are out there. And it's very important, again, for you to choose the right subledger, because there is a huge commitment once you do decide to get on one of these accounting systems. The cost of switching is huge. So if you need assistance in selecting the subledgers, this is something that our firm at Camuso CPA specializes in. We can start by assessing your company and give you an objective viewpoint when you're choosing between all of these subledger options. And after we help you select the right subledger, we can then move into the setup phase to set up your subledger and general ledger so you have an integrated accounting system, and then we can manage that for you on a monthly basis. So if this is something that you're looking for, contact me and my team today at camusocpa.com, and we'd be happy to sit down and speak with you to discuss your business and your needs. Until next time, I'm Patrick Camuso, signing off.